Hello, everybody, and welcome to Chart Request Live. My name is Sam Gatlin, and I'm joined by my esteemed colleague and co-host, Mr. Alfonso. How are you?
Hey Sam, I'm very good, very good. Very
Good.
interesting weeks in the market. How are you?
Yeah, I'm doing well. Gold's out here ripping, making new highs. It makes it pretty easy to write the gold rush column, gold stocks are ripping. I like to look at this GDX to SPY ratio. And
Oh,
look at
nice.
this, Alfonso. Since really this year, GDX has outperformed the S&P 500 by 60%. It's been off the charts. So good.
Yeah, no, I love it. But I like it too, GLD relative to SPY.
Yeah,
With that base already completed to the upside, it has been ripping higher. It has been, rocks over stocks in the past few weeks and months. That's for sure.
definitely. That's a big theme right now. With all of the economic uncertainty out there with tariffs and yada, yada, yada. Investors are fleeing to gold, the safe haven asset. Um, it's certainly not bonds. That's the safe haven. And it's
That's
definitely
correct.
not the dollar. The dollar's flirting with new multi-year lows. It's right here at the lower bounds of the range. The RSI is super oversold, so maybe it's not time for them to break it lower. Maybe they need to consolidate here for a few days, a few weeks, who knows how long, but it seems like this wants to break lower and go into the 90s.
Yeah, it's definitely pressing the towards the lower ends of this massive range, or Psi 14 under 30 in oversold territories. It's not positive here, but it's a big level. Buyers have to step in here if they want to still be in control. We have seen that in the past few years at this exact same level. So to be honest, I wouldn't be surprised if the dollar catches a little bit these days or this week.
For sure. And the largest component of the US dollar index is the euro.
Yep.
And here I have it outlined with the Fibonacci retracements from this massive drawdown that started in January 2021. It fell about 20%. And
Hmm.
here you are back above the 61.8 retracement of that drawdown. So I think the odds favor the euro dollar getting back to that 1.23 level at January 2021 peak, which
Yeah,
means the Dixie's probably going to break lower.
exactly. Yeah. So yeah, I cannot argue that definitely now. But this is a big level, so we will see. It's definitely shaping up in that way, the euro. So
Yeah.
it's a decision time for the dollar and euro and currency markets.
And how about the bonds, Alfonso? Worst week since March of 2020, last week. There's a lot of uncertainty out there, but investors certainly are not fleeing to the US bond market. They're doing the exact opposite, selling their bonds at a record breaking pace.
Yeah, I mean, it's interesting. Every cycle is different, right?
Yeah.
So, for example, in 2020, bonds were the safe haven assets during the pandemic. They catch a hell of a bid. During the 2021-2022 correction, it was the dollar. And in this tape, in this, corrective wave that we have experienced in the past couple of weeks and months, it's definitely gold that it's standing out as the safe haven. So it's very interesting to see how these things work. The TLT had, I think, one of its worst two consecutive days last week. Definitely not a good sign for bonds.
Definitely, Alfonso. So, what do you think about bonds and dollars falling together? That hasn't been the case for quite some time. It's a big
Yeah,
change
yeah.
in the market. It's very short term. That could change, but for now, that's the case.
Yeah, that's definitely the case at this point.
Kind of interesting. And what are you watching on the equity front?
Well, for key levels in the S&P,
Hmm?
and not only the S&P, I mean, I think the prior cycle highs for most of the indexes, call it the S&P, call it the Nasdaq 100, the Dow Jones Industrial Average, the financial sectors, technology sectors, you know, all of these big sectors and indexes came down to the prior cycle highs, former resistance, turn it into support. We caught a bit there. So that's the big level. I'm watching for the S&P around 480. For the Nasdaq 100 is 405 or 400 if you like it. So it was very interesting to see, you know, a logical level of potential support at the end. It ended up being real support. And I like what you have in your chart right there, the big one from the all-time highs. I think that could be a big level for the bulls if they can reclaim it. They can be, a little bit back in control. We experienced one of the best days in history since 1950 in the S&P. So, I mean, it's I think that like a good first step in the right direction for the bulls, but it's also worth it to mention that these kinds of the best days of often happens during bear markets bounces. So that's something to have in mind. I think volatility will remain elevated for the rest of the month, that's for sure. And we're experiencing a nice bounce here, and we will see what happens. But I like the VWAP from the all-time highs, to anchor a big level there.
For sure. In the market's definitely respecting that. You kissed it here on March 3rd. You got a little, I don't know what you want to call this, a shooting star candlestick there on March 25th. And sure enough, that was the top. You got crushed after that, down 16% in just a few days. So you have to think there are some dead bodies that want to get out of this market, and they will be hitting the sell button once the price gets back to there.
Yeah, definitely that 550 area. It seems, a logical area, to determine if bulls wants to, be more in control or not. And we will see it. I think we will see it soon. It's a fast market, so everything can happen, in a matter of days. So we will figure it out soon.
Yeah. What do you say we get to some tickers, Alfonso?
Yeah, let's take a look at some tickers in the chat. Alexander is asking us about 3 tickers. Let's take a look first at ERJ.
Okay, so we are looking at a $7.6 billion aerospace and defense stock here. Looks like they're in the aircraft business. All right, so let's zoom out and get a little bit of perspective on what we're looking at here.
Beautiful. If you zoom out, it's beautiful.
Let's look at a monthly chart, because this base goes all the way back to the peak in 2001. I think I marked this one up on CRL maybe 2 weeks ago now at this point, but
yeah, probably.
People are talking about aerospace and defense, and it's for a good reason,
The thing is that aerospace and defense and industrials, mostly aerospace and defense stocks, were coiling in a very tight pattern right below the 161 extension level. They have been showing relative strength in this tape, as we are showing in the chart. They are completing a reversal base, so they are showing some relative strength in this tape.
Definitely, yeah. Let's drop a WAP on the aerospace and defense ETF, and you can see we were just talking about the VWAP from the all-time high in the S&P 500. This is the same level for the ITA, and it's actually above it, decisively above it. It closed above it on that one of the best days ever, at April 9th that we were just talking about a second ago. Had a little indecision day the next day, and sure enough, you got more upside follow through after that. So from a leadership standpoint, I really like the aerospace and defense right now. And this is super actionable too, Alfonso. I love this. Who brought this along?
Alexander.
Alexander. Shout out, Alexander. Great chart. So what we have here is an IPO back in July of 2000. From there, you got 100 and let's call it 50% ripper. And then after that, you had a big crash, a massive consolidation. You tried to break out before the great financial crisis. You were slammed again. It took years to get back to that level. Then you were slammed again. And then it took more years to get back to the breakout level. And sure enough, the buyers finally got it done this year. We're above there, and we are retesting that breakout level. Look here, Alfonso. We have not closed above. We haven't closed below it. The buyers have held this line. You've got a few little wicks below it, but sure enough, successfully flipping that former resistance into support for now, at least.
Yep. I agree with you. I mean, that's a big level. The other way to draw it is just like horizontal resistance level with the 2007 highs. We halted the advance right there around 52. So, there are multiple ways to play this one, right? To analyze this one. So whether you prefer to anchor, your level and risk management around 40 level, around that level that you're marking up with the Fibonacci, or if you want more conviction, especially in these tapes, a decisive breakout above 52 that could be very accurate too. So it will depend.
For sure. I think you could get a little starter position here at $40 and then really make it a big boy position once we get a decisive move above that 2007 peak. Like you said, that would add conviction to the trade, but I certainly like the way this one's shaping up.
Yeah, I couldn't agree more. It's a great chart.
Yeah, it is. And a great pond too. Aerospace and defense is working.
Exactly, yeah. Now let's take a look at another ticker from Alexander. Let's take a look. I will pick STNA. I love that. I love this one.
StoneCo.
Yeah, this is a Brazilian stock.
So this is a $3.2 billion Brazilian regional bank. Is it a regional bank or is it more of fintech? It sounds more like fintech.
Yeah, it is more fintech. Yeah, more technology. Yeah.
Like the Robinhood of Latin America?
Yeah, from Brazil at least. No, it's looking good. It's interesting because the short float, the short interest is around 15%. So that's a number, right? That's a number. So, it's shaping up in the short term. When you trade these international stocks, you're also bidding in the local currency at the end of the day, right? You need a strong Brazilian real on this one for this one to work at the end. And we are, right there. We are in a big level, former support. Now it's, turning into resistance. We're trying to hook it up higher around this former support level. So, if we get strength in the Brazilian real, definitely expect this stock to perform well. So today is up almost 1%. It's shaping up and very nice base in the short term. So, I like it, to be honest. And especially if we see, that dollar breaking down and complete that massive range that we mentioned before, definitely this one will go higher.
Absolutely. And financials are a good pond to fish in too. We were just talking about relative strength with aerospace and defense, and financials have been hanging in there very well too. And it's not just JP Morgan and the big US banks, but also European financials. Some of the worst financial stocks in the world are performing well.
Yeah, that's right. I mean, we just broke out to new all-time highs a couple of weeks ago in the EUFN ETF. We dipped below that former resistance level, and now we're back above it. 26 and a half seems the big level for European financials. So as long as we're above that level, the path of this resistance is higher for European financials. And if European financials are doing great, it's a positive development for the rest of financials around the world.
Definitely. So yeah, let's outline some levels here with the StoneCo, Alfonso. So how I see it is you just want to trade this range right here. This is
Right.
in the context of a massive drawdown into some type of consolidation phase here. So I think unless you have a longer time frame, which in that case I would wait for a breakout above that 18 level, because then the real move starts. Then you're talking about getting back to that prior cycle high. But for now, we are in the middle of a range, so we want to be a little bit more tactical, I think,
Yeah.
at least.
Yeah, I like that 1150 level or 12 level.
Yeah.
Yeah, that small base there could be the first catalyst for a trend reversal, at least in the short term. Of course, that VWAP from that pivot high from 2024, it's also a big level, but I will use it more like a confirmation that this trend it's underway to the upside at the end. But first we need to clear that 12 level maybe.
For sure. Yeah, that's a super clean level there. And you get confirmation at that 1270, like you said. Ultimately, we would probably want to trade it back to that 1850 level. You can see we peaked here in December and turned around there for several weeks before ultimately resolving lower. But I think there's going to be some dead bodies there that are going to want to unload. So I think that's probably a good idea, taking profits up there. But that's still a great trade in a tough market. That could be
I like it.
Quick 50% move there.
Yeah, I definitely like it, but it's also more. It depends also on the potential strength the Brazilian real gets in the next couple of weeks and days.
Yeah,
that's a huge development.
Definitely. No, I like this one. This was also Alexander, is that right?
Yeah. So now let's take a look. The optionist is asking us about TLT monthly in a buy zone, is asking us, and also our thoughts in the XLP SPY ratio and consumer staples in general. So let's take a look at those two charts.
Sure. So I'm not really sure what they mean by TLT.
Well, for the
buy signal.
Well, for the TLT, I mean, I think he means that it's a big level of support. If you zoom out, if you put a weekly chart or even a monthly chart, we are right there around that area of 81 to 85. I will say that we're right there. We're calling at this level. Nothing. I mean, we mentioned it early in the show. I mean, U.S. Treasuries hasn't catch a bid in this tape, so it's a little bit it's a mess, to be honest.
For sure. I personally think that bonds are most likely heading into a prolonged bear market. They had a bull market for like 40 years. This chart doesn't have all the data, but this goes back to like the 1980s when bonds really bottomed and started to enter a brand new bull market. And that all changed in 2020. They got absolutely hammered then, 50% drawdown. And they've been consolidating here for several years, but I don't know, Alfonso. I'm not convinced that they're going to hold this level. I think they're going to make the lows.
I think if you put the 30-year treasury bond, the yield, the 30-year yield, you will see what we're talking about. That's a clear downtrend for years in yields, and now it's shaping up upside. But I can see a scenario that rates remain a little bit sideways, back in the top of the range, back in the lower ends of this range for longer, to be honest. And we will see what happens.
For sure, yeah. Not anything I'm interested in buying though, especially on a monthly chart. Maybe more of a tactical trade. Sure, that could make sense, but over longer time frames, I don't really have anything good to say about it. We wanted to look at the XLP SPY ratio too, right?
Yeah, This is a good one. I have been pounding the table on this ratio. It has helped me a lot, to determine and measure risk appetite at the end of the day. In healthy bull markets, you don't want to see defensive sectors as consumer stable stocks to outperform the rest of the market, right? So for me, as long as we're above that key support level that for back in the 2000, it's a risk off environment, to be honest. I mean, it's nothing good happens if we're above that shallow form lows. And that's it, right? You don't want to see defensive sectors and defensive names to outperform. When we see this kind of behavior, it's typically during bear markets or during corrective waves. So this is a big one. This is one of my favorite ways to measure this risk appetite, and this one has been playing very well in the past few weeks and months, to be honest.
So Alfonso, you get the option to have consumer staples versus consumer discretionary, or consumer staples versus the S&P. Which chart do you want? You only get one.
Bro, I like it the both.
You can't say that.
No. I have to say both. We weigh the evidence at the end of the day.
Yeah.
This one, for example, did that failed breakout a little bit later than the XLP SPY, for example, and it was a good confirmation of what that chart was telling us before. But this one is huge. This one is huge, and it's the same thing at the end.
For sure.
You don't want to see. Yeah, exactly. You don't want to see consumer defensive stocks to outperform their offensive peers as consumer discretionary. That's for
Absolutely.
sure.
That's interesting, though. You mentioned that the XLP SPY ratio led this one to the downside. I didn't realize that. That's really interesting.
Yep, let for a little bit at the end.
Yeah, cool. That's helpful. You could have been selling back in December if you were watching that XLP SPY ratio.
Or at least, warning signs at the end, right? Similar to the high yield versus treasury bonds back into the bond conversation. That's basically credit spreads using ETFs. They put a potential failed breakouts at the prior cycle highs. And it was a good, warning signal back then.
Cool. And that's all we can do as market technicians, listen to the signals the market gives us.
Yeah, and these risk appetite ratios are very, very helpful, especially in this kind of tapes. I mean, if you want to know where we're heading into the next few couple of weeks or, even days, I recommend you to look at these key ratios because they tell a good story. Here you're looking at high yield versus treasury, put a failed breakout back into the below the 2021, 2022 highs. So, again, it was another failed breakout in favor of, defensive rotation. So, now we're trying to settle down a little bit. So, it's we have to wait a little bit longer to see these ratios and the damage to be repaired.
For sure. And this one especially was just a really quick and nasty failed breakout. It's probably going to take some time to repair this damage. You could just be carving out some type of little handle here, and this could turn into a cup and handle formation. But I think sideways is probably going to be the trend here.
Yeah, I couldn't agree more. But now let's take a look at Mr. Servi. I know you're waiting for this NFG. How about that chart? I know you know this chart, Sam.
Yeah, so. I do. Guilty. And shout out Mr. Zerby, always bringing the heat to the show here.
Amazing.
He's great. So here we have the National Fuel Gas Company. It's about $7 billion, 2.7% dividend yield. This is an integrated oil and gas stock, but they're more in the natural gas business, which is certainly what you want to be leaning into right now. Let's just look at the crude oil. So the crude oil is resolving lower from this massive consolidation. It's just been churning around sideways here. We've been talking about the Bollinger Bandwidth getting super tight for a long time. We knew a big move was coming. And it seems like the market is telling us that move is to the downside. So I think you want to be very careful with vehicles that have a lot of long exposure to crude oil. Natural gas, on the other hand, though, it continues to work despite the weakness in crude oil. So I like this for that attribute. And I like Sorry?
Yeah. No, so will this enter in uncorrelated trades?
Absolutely.
Natural exposure, right?
Mm-hmm. So that's what you want in market environments like this, Alfonso. You don't want to be super correlated to technology, the Microsofts that are getting slammed and resolving huge tops. You want to stay away from that or short it if that's what you're into, but you certainly don't want to be super long those areas of the market. You can take tactical bounce trades, but other than that, look out below. The National Fuel Gas Company, ticker NFG, looks like that 79 level is the one to watch. If you want to get a little starter position above 76, I don't hate that. The market's also told us that level is important. So it's really just that 76 to 79 level that you want to be involved here. I think you'll get the breakout soon. So a close above 79 would mark the breakout of this massive base. And I'm looking at 108 as the first target on the NFG. What do you think?
Oh, that's perfect.
Plus, it's a 2% dividend yield.
Look, when we get these charts in ChartWest Lives or Lives, it's easier. It's a very well defined level. That's a big base. One of our favorite setups here. So any break at about 79, it will set the stage for a next leg higher target. I don't know, north 100. So I like it. I like it when you have these very clean horizontal levels, and you can define risk, and you only have to wait for a decisive breakout. So I really like it. And Mr. Zerby again with a big
shout out Mr. Zerby, always bringing the heat. I don't think he's ever brought a bad ticker to the show.
I think so, right?
He's great.
So that's great. So let's finish with MRX. H10, it's asking us for this one. MRX Group, capital market for the United Kingdom. It's almost 3 billion market cap. I think it's a new one, right?
Yeah. So this is a brokerage for commodities, financials, and FX. Like you said, it's from London in the UK. Nice. Very interesting. So this could be kind of like an IBKR. In my head, that's what it should trade like. They were trading together until this happened.
It's interesting, and it speaks, that rotation into international equities that we have seen in the past couple of months. Interactive Brokers just looked at purple or pink line going down, and look, MRX holding up much better, pressing against new all-time highs. This is a great example of the strength outside of the United States. I love it. And if you zoom in a little bit, it has a nice risk level, to be honest.
Let's look at it relative to the European financials too. Its peer group. It looks very, very similar. Consolidating near all-time highs. So I love that. So
no, the relative it's outstanding. That's for sure. It's off the charts. If you do it, if you compare it relative to the UK ETF, to the United Kingdom ETF, it's pressing against new all-time highs too. It's up and to the right. It's looking so good. It's looking so good. It's definitely a name we want to keep in our radar more often. That's for sure. I like it. Great chart. I will say that's my favorite from today. So I really like it.
Ayo. Front running the chart of the day. I'd like to see it get oversold too. But that's real, or overbought, I should say, not oversold. It's interesting to note that it's never been oversold actually on the 14-day RSI. But if you're looking for, that's the only reason I can come up with to not own this name is that RSI not getting overbought as it's making new all-time highs here.
No, this
other than that, no, this is sick. This is great.
Yep.
So how would you fib it out, Alfonso? Let's figure that out. So there's lots of ways to fib it out here. I'm doing it based on the closing prices, based on this first range. That gets us a target of that 37 level. I think that could make sense with its target of 49. I tried it with the Wix, and it looks more like this, which is
I like it more.
Helpful.
Yeah, I like that. I like that one more. But other than that, I mean, look, the big level is around 40, right?
Yeah, for sure.
Whether you use the 423 extension or another extension level, that's the level, right? 40 is the level. It's a logical level of resistance here from back in February. So any breakout above that area, I like it. I think 50 it's next, 55.
Yeah.
So it has a lot of potential to the upside. That's for sure. So I really like this one.
Definitely. The British Interactive Brokers is what we're going to call this.
Exactly. I
love it so much. I hadn't seen this one actually. This is a new one for me.
It's a new one. Wow.
So who brought this one along? This is great. Was this Mr. Zerby too?
No, it was H Chan.
H Chan. Shout out H Chan. Wow.
Yeah.
Good eye. This is great.
Yeah, I like it.
So this is your chart of the day. I think mine has to be Mr. Wavy. I can't go against this one. I think you already knew what I was going to say, Alfonso, but this chart is amazing. I love to say the bigger the base, the higher in space.
That's true.
Boy, do I think that's going to be the case here. With these big bases, sometimes the resolutions can be slower than you expect, and you can just churn around this level sometimes for years, sometimes just quarters, months, weeks, who knows. But if this one's above 79, I like it a lot. You're gonna get that $100 roll. 108 is what I'm looking at as a first target. Shout out Mr. Wavy for bringing this one along. This is great.
Yeah, this is great. Yeah,
awesome.
I like it.
Well, let's leave it here, Alfonso. And if we didn't get to any of the tickers in the chat, just email us at questions@stockmarketmedia.com, and we will be sure to get to your ticker next time. We put those tickers at the top of our list before we get to the YouTube chat. So please do not hesitate to email us at questions@stockmarketmedia.com. I see the chat is super active today. I appreciate everybody being here. This was a ton of fun, Alfonso. We don't do this enough together. So
We will do it next time, that's for
For
sure.
sure.
So thank you
Great.
everybody for being there. Thank you for all the tickers. And send your tickers to the mailbox, or just being here next time, next Monday at the same time, and just bring your best charts and stocks.
Absolutely. We will catch you again next week, everybody. Thanks for being here. Have a good week.
Bye, guys.